Hello, everybody, and welcome to another Pepperstone Learn It Live webinar. Today, we're going to be talking about one of our favorite things, scalping strategies for trending share CFDs. My name's Thomas Atkinson from FX Evolution. As always, I'm joined by Tyrone. How are you going, Ty?
Yeah, good, thank you. Yeah, we find ourselves in the midst of earnings season, and I think it's a very timely reminder of trying to join trends and looking for those strategies to get you in them in the stock market. So looking forward to tonight.
Absolutely, Ty. One of our favorite topics to talk about, stocks and shares, of course. And then on top of that, it gets better because we've got earnings and we've got massive earnings weeks. So if people aren't aware, this is one of the biggest earnings weeks that you ever will see in terms of large internet, big conglomerates, I guess you would say, in America. It's phenomenal stuff there. And of course, Pepperstone has so many of these instruments to be traded. And we've got some exciting news to also be sharing with each one of you today about some of the big things coming to Pepperstone. So the information, of course, contained in this video or webinar is generic in nature and should be considered educational purposes only. The information will not take into account your personal objectives, financial situation, or needs. And of course, should not be construed as an offer, recommendation, or solicitation to buy, sell, or participate in any particular trading strategy. So Tyrone, as we always say here, why are some people not in the Telegram group from Pepperstone? It's a great group, isn't it? And we'll put the link in the chat right now if you're not in there. Definitely recommend you get in there. Get involved in the community of Pepperstone. They're bringing content daily to you. We've got webinars like this one that get posted in there. You've got Chris Weston stuff that goes in there. You've got helpful bits of tidbits and bits of information, like all these tidbits and bits. And there's just so much stuff there, daily recaps, etc., etc. So I definitely say get in there. Sure, Tyrone does as well. We follow it as well ourselves, and yeah, we'll pop the link in there. If you want to follow us as well, we have a Discord community which we'll chuck in the links as well.
For sure. If you're trading, you must be on the Telegram that Pepperstone provide. It is all the information that you need. You've really got to be in it. It's free. There's just no reason not to have it on.
Absolutely, Ty. So why are we excited about today? Well, I think it's going to bring a lot of value to all of you out there. And that's going to be, what are we covering? Well, we're going to cover how to scalp trending share CFDs. We're going to be taking a look at earnings as well for some of these big companies coming up. Apple aftermarket today, phenomenal. The biggest company doing its earnings. It's going to be a big one. Live chart analysis, of course, on MT5, and then key scalping entry points and indicators with some live Q&A with both of us later on. So if you have questions, feel free to ask them throughout the webinar. We answer them as we go, and we also answer them at the end. But Tyrone, it doesn't just stop there, because big things are coming to Pepperstone MetaTrader 5 platform on the 28th. And it looks like we're now going to have PayPal, Afterpay, Zip, Crown, and JB Hi-Fi. So for Australian traders out there, you'll be specifically extremely happy with a lot of these. Afterpay, Zip, amazing stuff. And PayPal is, of course, one of my favorite companies. So I love PayPal, and PayPal have been doing very well in the market. So all some exciting stuff, specifically also, if you're a trader, these all present some big opportunities because they move a lot. And you know, FMG in Australia, Ty, for a while was the one that people were using, but now it's gone to Afterpay, hasn't it? Afterpay is being traded very heavily.
100%. Yeah. Is that the 28th of April or the 28th of May, Thomas?
I think it might be the 28th of April, actually. I think it should be on there. I'm not sure if it's on there today or tomorrow.
Hopefully today's the day we're celebrating. I'll actually check while we're doing this.
Get in there and have a look. Yeah. So just while Tyrone's checking that one out for us, basically we have massive earnings week, as we said. We saw Microsoft come out with earnings yesterday, AMD, Alphabet, Google. We'll talk about Google in just a few moments, obviously available on the Pepperstone platform, an amazing one. And then we have things like Apple and Facebook coming tonight. So what does that mean? It means implied volatility is up, and it means opportunity is there. But how do we trade it? We'll be going through it. Unforeseen volatile news as well, Ty. I always have this slide up. I just think it's important that if you're trading the Australian market, you need to be aware that sometimes there are pauses in trading. It's a little bit different to America. America will often just kind of freeze it for a while and then reopen it. In Australia, we often have trading halts. So sometimes you just want to, if you don't see something trading or you're not sure what's going on, possibly just search that code and just space ASX in Google, and that will bring you to the Australian Stock Exchange, and you can quickly just check on any news announcements coming out there, because they'll all be there. They all go through that central system, and it's so important to follow that. So which shares or which stocks are best to start with or trade on, Ty? And I think a lot of people lose sight of what they're really wanting to do. Pepperstone offers some amazing high quality shares and stocks. And actually most traders, they usually have like a basket, don't they, Ty? Which may only be 5 to 10, and they become like kind of like intimate with these trades, with these
Yeah,
stocks.
that's right.
How do
Exactly.
you find? I mean, most traders that we know professionally, they stick to not many, isn't it?
Yeah, that's right. Look, it's good to, in a sense, it's good to understand the stocks that you're trading. So, it's very difficult to keep abreast of, 1,000 different stocks out there. There's probably more, but realistically, if you have a handful of your favorites, you understand their movements and you understand your expectations of, things like earnings, things like dividends, and you also understand their daily ranges, which is really, really important. Very similar to how we look at the currency markets, picking a basket of your favorites. But the good thing about the stock market is, though, that you can broaden it. A lot of people do have their 5 or 10, but I think that probably comes down to trading capital, really, not to invest in too smallly across many different stocks. But in saying that, there's such a big range to pick from, and a lot of them are very high quality. And look, the list keeps big. It's getting bigger and bigger every week. They're adding things that we don't even know about, but we're always going to tell you about the big ones. But you can see the list is very extensive now, and there's not a lot there that you probably can't trade. And if there is something that you want to, probably let Pepperstone know, because I can probably add it for you down the track.
Yeah, absolutely, Ty. So sticking with the big ones at the beginning is often one of the best ways of going. And then, of course, understanding that there are seasonalities in markets. We just came off the back of a very nice April month, which we've been talking about on this webinar. I've been using this slide pretty consistently. Will we now see what they call sell in May and go away? That's the old adage with it. It seems like it's very possible, Ty. And I mean, we're following a very similar track. In fact, if you get the difference between the GFC, so the movement from the GFC, and then the recovery from the global financial crisis, and you overlay that with the recovery currently going on, what you'll actually notice is that they're very similar. In fact, they're eerily similar. Even the percentage gains after are eerily similar. Super surprising stuff, but a very similar kind of track plan, and that's something that we do pay attention to. You also want to know, of course, about dividend payments, times of day to trade the market, and current leverage versus future leverage that's going on in the markets right now, and then some lead indicators that we've spoken about. But what I want to do, Ty, is I want to get into the actual markets. I want to talk about some of the earnings that have already come out. So we've seen Tesla, and Tesla had its earnings Monday after the close in the US. And this led to some selling pressure in the markets. You can see here that Tesla is now pre-market open at around 695, and it is really coming down and testing what I guess is a very important line for it to hold throughout the session. I've drawn some key resistances and supports that we've been talking about here for the last couple of weeks. 745 has been a very key resistance for Tesla. We also had 720, which was a very key support and resistance level. You can see the way that the 4-hour has closed around these levels, and now we're around that $700 on the open. So it's important that Tesla holds this, but if it doesn't hold this, Tyrone, does this expose Tesla for further shorting potential in terms of technical analysis? What are your thoughts about Tesla's price action here and where it's going after earnings? So earnings went bad, but the market obviously always wants more, doesn't it?
The market always does want more, and especially at a time where a lot of people think, and probably rightly so, that the entire market is overcooked. So given where we're at from a worldwide opening standpoint, so the market is expecting very good results, and even good results could actually see a decline in the stock, just simply because everybody wants better than expected, because the market is factoring in extraordinary results, really. So even good results could actually be their undoing. But look, it would want to hold that level. There's no question about that. It wouldn't want to be breaking that level, because if it does, I see a 5, 20 and 50 moving average cross that's not far off happening. There was a double top there that it's effectively played out, and its take profit is literally where it is now. So yeah, you could definitely see that there. Like you draw that down, and here she is. So it's definitely landing at a role reversal zone, but this role reversal zone would want to hold, or the 670 level is looking very likely for it. It's not often, yeah, from our experience, when a bad earnings report does come out, it can actually sell off for several days after, and sometimes support doesn't hold it. So yeah, the market's factored in what they've crunched the numbers. Sometimes the initial reaction isn't always the correct one, but after it's had a few days to think about it, you want to be very, very mindful that this level needs to hold, or else there's probably another $20 or $30 of very, very big weakness in it. And that's the great thing about technical analysis, is that you can apply it to so many different things, and it's all the same. We're looking for the lightning bolt. We're looking for the tests of these levels, the break of these levels, and then of course the retest of these levels from the bottom. Either of those scenarios that we've just drawn on the screen, happy to play the game on any of them because they all make sense. And they're very important levels. So when you're applying your technical analysis, there's no need to change up from what you're doing in the currency markets.
So I also wanted to bring this chart up, Ty, because before earnings, we saw it starting to test that resistance. And this is a common thing that occurs in currency markets, in commodities markets, and in stocks markets. Sometimes we just say, you can keep it simple, or use the KISS principle, and you can really focus on almost every market in many similarities. They work all the same way. Key bit of information or news coming out, and you get to a key point of resistance or support. Why is Apple trading right on its resistance right now? Because we're about to see an earnings report. We're about to see what's going on with this literally at the close of today. So do we expect a decent amount of implied volatility here in the markets? Of course. Do we expect that Apple is trading within a range? Yes. And we've just drawn up the key area, because if it comes down, where do we expect it to find some buying support? Around this 130, 150. Why? 20 exponential moving average here on the daily, plus previous support. Now, if we break through this resistance, Tyrone, do we expect it to go like kind of a similar distance? Yes, because that's the kind of technical stuff that you should be applying when you're day trading, when you're scalping the markets and you're looking for opportunities. You should be saying, okay, well, we clearly have some resistance here. We haven't been able to break it, but if we do break it, we should move to the next zone. So being at a point of resistance or support ahead of earnings is incredibly common. And we'll show you some other big tech stocks that have been doing a very similar thing this week. What are your thoughts on this one, Ty, in terms of the way it's setting up, the way it's trading through these ranges, and specifically that daily? So see how on the 4 hour it closed above, but on the daily it has not. Is the daily the key here?
Oh, most definitely. The daily is the one that factors in all of the important information, obviously, and it's the one. Look, a lot of people make the mistake, and this is probably a good lesson actually to talk about this now. A lot of people make the mistake of trying to make the market suit themselves, and by that I mean, okay, clearly we've got a channel here that the price is being caught in. It's obviously at resistance. They haven't got a daily close, so what they're going to do, they'll go down to a time frame where they can finally get a close above that level, and they'll trade it like it's gospel. It's the worst thing that you can do, because what you're doing is creating an opportunity out of nothing. The real test of this is on the daily chart. Okay, that's where you really need to see the close above that level. Anything prior to that could be just a fake out, and I would never listen to a signal that is not at least a daily on an important one like this, especially before earnings. And that's why I think it's so important to understand and appreciate. A lot of people, you see it all the time. They say, well, why do we care about earnings? It's not like we're not waiting for dividends. We don't really care about the long-term plan, the long-term view. We just want to day trade. Well, guess what? It's really, really important to understand when results are going to be put out, because that's why this is setting up at this level. And what it does put out is going to determine whether it actually goes up or whether it goes down. So, whether you're a day trader, scalper, or a long-term investor, it is important to understand, what their earnings result, or more importantly, when it comes out, do you have to break down all of the fundamentals and understand all of its numbers? Absolutely not. But you need to know its expectation, and you need to know what it actually came up with, and that's the important part. Then the market will take care of the rest. But imagine not knowing about earnings about to come out and just trading this blindly, saying, well, the 4 hour just broke out, must be all good. You could be really you're probably already out. And that's the problem. Like, you're giving yourself a very, very big disadvantage straight up without knowing what's potentially about to happen. It's really, really important to understand.
What people also don't understand sometimes, Ty, is that when you get a closure above a point, let's say that's driven by earnings, there's often quite a lot of follow-on effect. I mean, it's repricing to the next zone, it's closed out of a key resistance, and you get that follow-on participation level. Let's take this for an example here. So actually this broke out before earnings. So obviously the market maybe had loose lips or something on here on Alphabet. But if we have a think about what's happened recently in Alphabet, beautiful breakout. We spoke about this. You can see we've drawn it all up. We had this level that we were looking for as a breakout. Now, when you see a breakout in the daily, you may say, okay, Tom, I want to do, or Tom and Tyrone, I want to trade the 1 and 5 minute and 15-minute charts, man. I'm trying to look for scalps. Well, yes, that's fine. You've seen the closure above, and you know that you now have bullish pressure coming through the market. So you're going to have a buying bias. By having a bull bias here and knowing that it's done a significant closure out, you can then get involved in the markets towards the buy side. If we think about what happened recently, just before the earnings result, we actually have a breakout of the previous resistance with this closure above on the daily. We then get another strong day, and then the rest is history. What happens with the aftermarket, absolutely phenomenal. Comes back, retests, and then just boom, massive earnings, really knocked it out of the ballpark. I mean, I think Google is up about 30% on year to date so far, Ty. Phenomenal for a company like this. And what that might lead into is potentially also Facebook being very interesting, because why are they doing so well? Well, they're making a lot of money out of ads. You can go and have a look at their earnings report. You can figure it out. And then you can have a look at Facebook, and you can go and say, well, did Facebook run yesterday? It certainly did. It started moving up because it's anticipating also having a relatively good result. So look, I think it's one of two things. If you're going to scalp into news, then you've got to expect incredible implied volatility. You could have great reward, and you can also have many stop losses getting hit, Ty. But Pepperstone does offer often the pre-market and the post-market, so you can trade those opportunities as well.
Yeah, it's awesome. I think that if you do want to scalp, I think those pre-markets actually give you a really good opportunity to get in and out pretty quickly, just on the rumor, if you like. Yeah, it is quite often a really interesting time. And actually, for those of you who are awake for the New York pre-market, you should jump into the FX Evolution YouTube channel, because the pre-market is done for the US for about an hour and a half before it every single night. And a lot of these moves you actually see all the time. We talk about them as they actually happen. So if you are interested in pre-markets, definitely check it out, because there is a lot of movement, and yeah, you can definitely get some really golden opportunities sometimes that aren't present or don't present in the actual open market themselves.
I think PayPal is a great addition to Pepperstone for this one as well, because PayPal really trades a lot off Bitcoin price. So sometimes if Bitcoin's moving, Ty, and you see a pre-market open and PayPal opens a little bit soft, but you're bullish on it, you've got other technicals that you're looking at, et cetera, et cetera, et cetera. You can actually look at the pre-market, and sometimes it will be mispriced when it opens versus when the actual market opens, and then the market will take it and of course rise or make it rise a little bit higher. So look, Facebook and Apple are the two that are on most people's decisions. Why is it so important that we know these things? Because when we go back over to the S&P 500 and we break down, let's say, a 1 hour or 4 hour chart here, what you'll notice is that the S&P 500 for all of this week has been playing with this 41 kind of 90 zone. Why is it playing with this zone? Because it's waiting for a piece of news that's going to push it through. Now, a lot of people had that pegged as being Microsoft. Microsoft had great earnings, but you can also see in the price action, Ty, that this market pushed up so heavily into the earnings that it had to exceed, it had to make a really, really, really great earnings. So you can see what happened. It came down to the 20 moving average, and then it found some buying pressure through this pre-market today. You think about how far away the trend is up. Even looking on a weekly here, imagine if you were a scalper, Ty, and you're looking at this 20 moving average, 20 exponential moving average, and let's say Microsoft comes back down to this level, and then on a 15-minute or a 1 hour or something, you see a little lightning bolt right around this zone. That's possibly an opportunity that you could be looking at from a technical level. So it's all about the top-down approach. We preach it a lot on these webinars because we think it's so important for people that are scalpers or anything really to be really focusing on. It's like even when you're thinking about this particular chart here and you're talking about Facebook, if you understand that there was a bit of a negative kind of thing going on here with a negative descending series of lower highs, Ty, and you love this type of setup, and then it breaks out and gets a closure above like this one, especially when it breaks out and closes above a 4-hour, 20, and a 50 moving average. Was this a zone where you would be laser focused on the smaller timeframes?
Oh, it's just, yeah, it's magnificent. It's technical analysis 101,
That's a good one.
and I think that, yeah, when technicals flow into fundamentals, if you like, that's what earnings is really. I think that it's poetry really, and it just adds that booster. And I don't know about you, Thomas, but the thing that's exciting me most about this earnings season is when Bitcoin and Dogecoin actually do their reporting. Are you excited about that?
I don't think they'll do any reporting.
I think that's probably what highlights it probably highlights a point that I want to bring up, and this is why we get so excited about the stock market, because yes, hopefully you understood that I was joking. Everybody, Bitcoin and Dogecoin are obviously not going to report because they've got nothing to report, but that is very, very different in the stock market. These companies are real companies that have real numbers that are expected to either hit their mark or not. And I think that really gives us an edge. And especially the other thing that we've got to really factor in, for those of you who are a little bit nervous about trading the stock market and CFDs, is that dividends are a thing. Like these companies, for the most part, all the big ones, generally do their dividend payments twice a year. So they're going to get those extra turbo boosters when they are actually going along. So when you do get a pattern that's looking a little bit long, and you've got a support level, for instance, and you get reasonable earnings, they've also got that extra booster of potential income coming from dividends and things like that. So although the CFD may not capture the full dividend, what it does do, though, don't forget the CFD is just a direct replica of what the stock is doing. So anyone who actually owns the real physical stock is going to get the dividend. So the overall market is going to push that market up because they want to buy in and get into the dividend. Of course, that's going to take up everything, including the CFD prices. So definitely something to consider, that you do get that extra layer of not so much protection, but probably confidence in a market when they are reporting well and they do pay good dividends.
I got a question here, Ty, and it's about what timeframes are best to scalp the markets. And I think that it really, the way we look at it is we go, okay, let's go top down. So what are we going to do with top down? We're actually going to check the weekly. And I know that sounds mad, but we're going to check the weekly, the daily, into the 4-hour, and then we're going to try to spot market structure in the daily and the 4-hour if possible. Then we go into the 1-hour, looking for confirmations each way, looking for buy wicks, rejections, that type of thing. And then where usually scalpers sit is 5 minutes, 15 minutes, and they can of course be on 1 minute. I do think though, when it comes to trading sometimes in stocks, you're better off going as small as around 5 and trying to steer clear of the 1 minute. I know a lot of Forex traders, they'll be used to the 1 minute charts a little bit, but I think 5 minutes probably opens yourself up to better confirmation time, and 15 minutes. Would you tend to agree with that?
Yeah, especially if you're trading things like the pre-market and the first hour of trading, because that's where you're going to get your price action confirmation. Anything bigger and everything's going to be obviously a little bit more delayed, and it doesn't really lend itself to very aggressive scalping. So look, 5 minutes is it's not something that like we do all the time, especially in the way we trade. But for scalpers and for day traders, it's an important time frame because it does shift the momentum either up or down. It's basically the first time frame. I mean, I think 1 minute is just too short. But at the 5 minute, when you see a series of higher highs and higher lows, or lower highs and lower lows, it can determine what's going to happen to that particular financial instrument, whether it's a CFD or whatever it is, for the next couple of hours. And I think that's why it's important, especially for day traders.
I want to just highlight this breakdown that we're just doing here, Ty, on Facebook, because I think Facebook really presented some amazing scalping opportunities here. And that was that we had that series of lower highs. We then saw on the 4-hour some strange rejections here. So we got some rejections, which pretty much means that there's some accumulation going on there, or at least there's buying pressure coming here. Why? Because you have the previous resistance over here around that zone. You've also got, guess what? A $300 psychological right around that zone. So if you're at a $300 and you're finding some buy pressure, it makes some sense. Then you break it down to the 1 hour, and you'll notice I moved over to a line chart, because in stocks, in CFDs, you should be using line charts. They show you the closure points. So notice how we have a closure here, a closure here, closure here, closure here, and then suddenly we break out above that closure. And this is all done on the 1 hour. What that closure is what Tyron was just talking about, a series of higher peaks and higher troughs. He was talking about 5 minute, but this is on a 1 hour. And then what that does is it gives us the opportunity to get a pullback to that zone and then dial in super hard onto a smaller time frame. So we can then dial in onto a 15 minute, we can dial in onto a 5 minute time frame. And there it is, Ty. There is what you want to see. Oh my goodness, look at it. It's beautiful. So
it's party time.
This is party time. So we've got our trough, our peak, our higher trough, our higher peak, bang. That's the type of thing that you want to be doing. It's bringing together the story of all the time frames. And therefore, you're actually really, even though you're trading a 5 minute or a 15 minute or 1 hour, you're actually trading with the big guys. You're trading with the Goldmans, with the JP Morgans, with the big algorithms as well, because you're breaking down the story of what the market's telling you. When you're only sitting on a 5 minute or 1 minute, 15 minute chart, you can't truly tell what the real momentum, the real flow of the market is doing. So this is a great example of the exact level that you're looking at, the exact type of pullback, and then the closure point that then can signal you to take longs for that session. If not, hold them through to other sessions.
Very, very nice trading.
Yeah, I think that's that. Even over here, there's a little close, get a little scalp in. Another nice opportunity off that base. So it's not really about saying, oh yes, I'm going to buy this zone. It's about waiting for that little bit of confirmation. And notice how you get that confirmation and then you get that quick flick of movement. And over here, you get a little bit slower movement. It comes back and tests, and then it quickly goes up to the resistance, and many people would be out. Bang, they're like, goodbye, I've done the scalp. It's all good, all green, all good on that action. So yeah, Microsoft came out, earnings were good, but didn't quite meet the market's expectations, at least how it initially reacted. Facebook at the end of this day, Apple at the end of this day, of course, stuck within a range. So we'll see whether it breaks out of the range, and Tesla at a pivotal support at this point. Then we've also got Amazon later on in the week, Ty. Amazon's another one that's been phenomenal in terms of the way it's been moving. And I'll actually go out to a monthly here just to show how Amazon's been trading. So Amazon's a strange one because it actually has gone up to 3,500 before and held it. And that's why, or this 34.58. So that's why it's actually come back up here and it's right around that resistance ahead of earnings. Now, if you were to take this as a massive channel, Ty, and you could, I mean, I think it's valid that you could take this as a massive channel between the closures each way, the bearish close and the bullish close. If
Definitely.
you extrapolated that out, I mean, this is a fairly large distance that would go out. Let me have a look how big this distance is. So this distance would take you to just underneath 4,000. So a pretty phenomenal level. Now, why is it at resistance right now? Because it's looking for that number. And if it gets that number, what is going to happen is you're going to see a slingshotting effect where the market will probably move through very aggressively, which you may or may not get if it gets that number. And then you can make more technical decisions in the next couple of weeks, if not days, whether you want to wait for it to come back down to this level, and then you want to look for 5 minute, 15 minute charts, but you may go into what is an accumulation zone or like a participation zone, sorry, between here and the next zone. And that could give you a long bias. Now, of course, this is just a technical, theoretical breakout that could occur, but if it does occur, it brings you to that top-down approach. You break it down from the top to the middle to the lower time frame, create the story.
Yeah, and when you know that, I mean, look, when you do it and draw it up that way, you know that level is supported around the 3,000 or 3,000 and a little bit. I mean, how about that hammer candle there on the last touch before it actually exploded up? I mean, like we'll just blow it out a little bit again, like on the daily there. If you go to the daily and just magnify it out a little bit. Look at the or no, sorry, in a bit, sorry. There's a little bit of magnification. Yeah, there was look at the hammer rejections off the bottom there. That candle there. Look at that one there. That one and the one you just were on there and there. Look at that. I mean, far out. Yeah, this is a daily time frame. This is a pretty serious time frame, right? Like you're talking about a whole day's action that's reversed, you know. But the most important thing about those candles is where they are. And you wouldn't know that those areas were important unless you actually went out to the weekly and drew them up. And I think that really highlights how important it is to start from the top and draw up your support and resistance zones, because it makes the smaller time frames, even though this is a daily, it is smaller obviously than the weekly and the monthly, a lot easier to trade, because you're very, very aware of those very important levels, and then you can take advantage of those very key moves. Very, very important.
All right, we'll go back into the slides here quickly and just go through some extra stuff here, Ty. And I think it's important that we understand who we are. And a lot of you out there are probably going to be working jobs. You may not all be full-time traders already. You're probably part-time traders or aspiring to be a scalper long-term, or a day trader long-term, or a swing trader long-term. So look, scalping is time intensive. Of course, if you're going to scalp, you've not only got to go through the top-down analysis approach, but then you also have to put in the time. So what we mean by that is you have to be there in the pre-market, you have to be there in the post-markets, or you have to select a time of day that you want to possibly trade that particular stock or share. And it can be time intensive, but it's also exciting and the reward can be great. Then there's day trader. So usually a day trader will have to put in at least 1 to 2 hours a day. Scalper might have to put in 2 to 4 hours a day. And then there's the lazy swing trader. Sometimes the swing trader can be putting in about 45 minutes a day and actually get some great setups. So I think it's important that you understand how much time can you dedicate to your trading. If you can dedicate a lot of time, then you can really take advantage of, getting into the markets and scalping them through, because you've got to be there for that before market session and then through the first couple of hours. Of course, times to trade for part-time scalpers and day traders will be around 30 minutes before any market session open. Sometimes even before that can be presiding good opportunities, as Tyrone said. And then you want to target things like breakouts and potential support levels for buying. Now, we say buying here, and we say that for a reason, because it's much easier, isn't it, Ty, to buy in the market than to sell. But we all have these grand plans of thinking, oh, it's going to be awesome to take it to Wall Street and to take it to everyone else. I'll sell the market, I'll sell that stock, and I'll make money. Unfortunately, the reality is it's easier to buy than sell. What are your thoughts, Ty?
It is. I think the market as a rule is generally programmed to go up. There's a lot of stimulus to try and stop it from going down. There's certainly no stimulus out there trying to make it go down, that's for sure. So I know when I'm trying to trade, I'm trying to get as many things in my favor as possible, and having the might of the Federal Reserve is definitely a bonus, I would say.
It certainly is a bonus, especially when at any point they'll have like a little meeting and then or even an emergency meeting sometimes and say, oh, we'll do this, we'll do that. Yeah, so you've got to remember that they are up more than they're down, but there are certain seasonals, again, like we were saying previously, where certain months are better than others and some months aren't great. Like, September, October in the US market, notoriously not the best after those final earnings kind of that come through. And then December rush is often quite significant, isn't it? The Christmas rush, the Christmas cheer, some would say, that starts kind of around that Thanksgiving time in America. It's important to know your holidays as well, or way things trade around those. Just so much cool stuff, but also some work you've got to put in.
You do. You need to know these things. I mean, look, as a rule, it doesn't happen every single time, but for the most part, May is a very weak month. Now, if you don't know that and you're not aware of that, boy, you're going to have a tough time going long. You got a lot of market forces. You got 100 and probably 200 years worth of history going against you. It makes it very, very difficult, but doesn't mean that you can't trade in May. Well, of course not. But what you're looking for is probably better opportunities to enter. So you're going to wait. You're going to be a little bit more patient and wait for those pullbacks to good levels so you can join in. Because yes, as much as it's a sell in May and go away, it's come back in June and go to the moon. So realistically, you've just got to look for those really good levels.
And go to the moon, is that right? Is that a new coin phase? I can feel that.
I think we can make that an FX Evolution exclusive. But in all seriousness, it doesn't mean that you're not trading in May. It just means that you've got to be mindful that for the most part, the market is weaker. So you want to time your opportunities a little bit better and look for those better. Be a little bit more patient. Wait for the market to come back to you rather than chase it, knowing that history is on your side, that it will break out of May and then start to pick up again all the way up until September. So really, really important to understand these little intricacies of the market. Otherwise, you could be, pushing the proverbial uphill.
Exactly, Ty. So a lot of people have been asking us about the moving averages that we use. We use a 20 EMA, a 50 EMA, and a 200 SMA. Now, a lot of people also say this to me, Ty. "Oh, I think the 20 and the 50 are too slow for scalping." I found them to be actually quite good. I know some people, we used to use 5 and 8. We used to use 5 and 8. But the thing about 5 and 8 is you get tons of signals. Now, if you want to be there all the time getting heaps of signals and feeling great about over trading possibly, then yeah, 5 and 8 are also used ones, but 20 and 50, we feel very comfortable. They go through everything. And the great thing is you're keeping it simple. And therefore you can take it to anything. You can take it to Forex, you can take commodities, you can take it to stocks, etc., etc. Then we've also got one of Tyrone's favorites, the MACD indicator. And I'm just going to go out here and let's have a quick look. I haven't actually looked at MACD on this. So let's have a look here, Ty, at the MACD indicator on Apple right now. Let's have a look at this on a 15-minute chart and we'll scroll it out a little bit and we'll see what we're seeing here with the breakouts. So let's actually go 1 hour. There we go. So MACD, I mean, Ty, do you want to walk us through these peaks here? What are your thoughts when it's been reaching these peaks?
I think it's really, really important to understand. Look, yeah, understanding what MACD is actually the most important part about trading it. But as you can see, every time it touched the top of that resistance there, the MACD was getting lower and lower and lower. So what that's telling us automatically and understanding this straight away is knowing that the market is losing momentum. It's losing momentum at a very, very critical point. Now, if you're aware of that, you're looking for the shorting opportunities on the smaller time frames. And when you do that, guess what? You're going to be able to short it to the bottom of the channel. Then the bottom of the channel comes, and lo and behold, you've got MACD divergence. So MACD is a very, very important aspect of any trading really, because it's really giving us the most important information that we need to know, and that's market momentum, or I guess deceleration, if you like, of one of these particular, whether it's prices doing the deceleration or increase, or whether it's actually the moving averages, which are of course a consequence of price. That's why MACD gives us so much information. I know a lot of people think it's just a fancy word and it's a sexy acronym for some moving averages, but moving averages tell us everything about the market. Don't worry about that. They tell us all the important things about market momentum, especially at the key levels. And that was just a very basic example of how important it was there to signal that, guess what? Apple was losing a lot of momentum up at those peaks, and at the bottom there, the moving averages were giving us a very different story to what price was. That the smaller, the faster moving average was starting to increase towards the end of that second trough there, giving us a signal that we're about to potentially move up. Momentum is everything in the market, and that's why you really need MACD on your screens. But probably just as importantly, understanding what it does and why it does it. That way you can read it a lot quicker.
I think another thing that's even really great about going to the higher time frames here, Ty, is not only were you reading that MACD, but you were also hitting a 50 exponential moving average on the 4 hour at the same point as you're hitting support. So there was a lot of, it's all about bringing together as many reasons as possible as a scalper or a day trader or a swing trader. And you want to bring together ideally around 3 to 5 separated reasons. And when you do 3 to 5 separated reasons, then you have the opportunity to really make more informed, better decisions. Because all of this stuff, all of trading is really statistics and trying to get the statistics in your favor. So we talked about sector performance before, we talked about seasonals more than anything else. Sometimes some sectors are outperforming other sectors. So of course, we've seen technology be one of the biggest rotations through the through April. Before that, it was financials, it was materials, etc., etc. So knowing where your sectors are at, knowing how things have performed over time can be very interesting. This type of stuff is more probably geared towards the swing trader and the investor in CFDs, but it's still also interesting to know those types of things. Top-down approach, we talk about that a lot. Recognizing trends, you want to know what's happening on the daily trend or the 4 hour trend, and then bring that into your bias over time. And then we've got, of course, whether we require a series of higher peaks, higher troughs, and all of that type of good stuff. Ty, we talk about this a lot in our course that we run, our masterclasses on fxevolution.com. But I guess, look, how important is it to read price action from a series of peaks and troughs, understand the lightning bolt, understand basic market structure such as channels in share trading?
It's vitally important in any trading. Look, at the end of the day, price action, leads the way. It's the most important thing. And if you don't understand it, you're at a very big disadvantage to people who do. So, and regardless of whether you're actually a long-term investor, medium-term, or a scalper, really, knowing just because you don't, maybe care as much about your entry point, even if you're a long-term investor, it doesn't mean that you can't try and get a better one by understanding what price is doing, right? Understanding patterns, understanding the entry points. We, as a rule, we have to, build up on our knowledge, and it made such an extraordinary difference. Look, don't take it from people who are just, doing webinars. Take it from people who do this for a living every single day, which is obviously myself and Thomas. We do this every single day in the open markets. We're not just here doing webinars. What our real day jobs is actually trading real money, and lots of it. And we believe in all of these things that we teach, because we don't teach anything that we don't actually believe and don't actually do on a daily basis. So take it from people who should know, because we do it every day. If you don't understand it, you're at a big disadvantage to people who do. And the one thing you certainly don't want to be doing when you're risking your money, your own money, is actually being at a disadvantage. You need to put the power in your hands and understand all of these things that we're talking about. And if you don't understand the price action that we've talked about, or the MACD, I really encourage you to go back through the Pepperstone webinars, check out their library, because there's a lot of very good information on all of the topics that we've talked about tonight, and some very, very informative webinars there.
I've just been scrolling through as Tyron's been mentioning, understanding what's going on. I was just scrolling through a couple of these slides that we use regularly. And I just wanted to say, like, things like 1, 2, 3, 4, these 1, 2, 3 trading styles, the same principle in stock and share trading. This is, of course, the euro US dollar, but it doesn't matter. It's price action. It's market structure. We've got a series of higher lows coming into this event, which is showing that we have a bullish looking market. There's clearly some momentum going on here. This is a 1 hour chart, it looks like. And when it breaks through this resistance, that's such a key level. Imagine if this is a stock's been getting beaten down for a while. Maybe we've been selling it on that way down, and then all of a sudden we see it form a base, and then we see a breakout from that base. What is that going to do? It's going to signal us to be looking for scalping longs, and then taking it to the next level of resistance, so on and so forth. So all these trading styles we always talk about, they work really well across the board. Of course, 3 really great indicators that scalpers can use in share trading: stochastic, MACD, and our favorite, moving averages. Moving averages are exceptional kind of things for using, very simple, very basic kind of concepts, but when you bring them together with price action, if you were just to put a 20 exponential moving average on a chart, and you were just to put just a chart there, Tyron and I'd be pretty happy. That would be all we need, isn't it, Ty? We already know what these are going to be doing at every point in time, because you can tell based on price action. You can tell. You actually don't, you don't even need them. But 100%. It takes the time to get there.
100%, and that's the thing. And look, at the end of the day, when you've been doing this for a little while, you will know you'll never draw another Fibonacci retracement. You won't even have MACD on your chart. Why? Because you understand what price is doing, and you'll know exactly what those signals will be just by looking at the price action. And you will get to that level. You don't have to be a rocket scientist. Thomas and I certainly aren't rocket scientists, but you do get familiar with what you're looking at, and I think that's the important part. Once you get that experience up, you can make very, very short work of very quick analysis.
So Ty, look, we'll hand it over to Q&A in just a few seconds. So if you've got questions, ask them right now. We're happy to answer those questions, so feel free to put them through. I just want to let everybody know we have a special for only Pepperstone clients. So if you're a Pepperstone client, or even if you're in this webinar, because you'll get it anyway, pretty much if you're interested in taking our masterclass in everything to do with technical analysis, and just realistically get involved in also our private trading community, where we do daily kind of updates on things to do with shares, of course, things to do with stocks, currency, commodities, and everything else, then you can apply this code, and it's on fxevolution.com, and check it out. But we'll hand over some questions here. And Ty, I think, well, there's a few questions coming in. Can I get these slides? Yes, you certainly can. Go to YouTube, search Pepperstone. Tomorrow it'll be up, I believe, Ty, and you can then watch this webinar in all its glory on YouTube. So that won't be a problem at all. And a few other people here saying, what time frame again should we be looking at? I said it before, but I'll say it again. I think the time frames for scalping are, just remember, you want to know where the daily is at all points in time. Daily is probably the most important time frame. Then you want to know where the 4-hour structure is and trade swing is. And then 1 hour is where you start to make more decisions. And then of course, 5 minute, 15 minute is where you're going to be scalping the market, sometimes upwards of the hour. You can scalp the hour as well. You'd be surprised how fast you can be in and out in this market the way it does trade at the moment. I've also got a question here. Any suggestions for Forex beginner traders? Well, everything we talked about today, other than the seasonal stuff, there are some seasonals in Forex, but very little, is pretty much important. So all of the same kind of moving averages, all of the same kind of time frames are still very, very relevant. The same structure, the 1, 2, 3 style, the role reversal, the patterns, the channels, the indicators. We use them for a reason because they work across the different instruments. And once you learn one thing, then you don't have to think about it too much when you go to another instrument, because you will expand over time. Another thing with currency, I think you should be watching the dollar index, which you can get on the Pepperstone platform, and start off with USD majors and JPY majors. I think they're probably the two most technical kind of areas to start with. Ty, your thoughts?
Yeah, definitely. And actually, leading into another question, we've got a few requests on the currency markets. We've got a webinar starting in only a handful of minutes, actually, for tonight's webinar, where we look at all the currency markets and we actually analyze it live. So a little bit different to tonight. It's more an analysis. So I'll actually get a link in the room for tonight's webinar as well, which starts in about 10 minutes or 15 minutes, and that's free to attend for everybody here as well. So yeah, and also there's a lot of people asking about training and the courses, and look, I've actually put the 10-year Pepperstone sale in the window there, so for anyone who hasn't got it, you can PM us and we can get it to you. That is it is a very, very big discount. And look, a lot of people don't know this, but Pepperstone's actually been around for well, they've just had their 10-year anniversary. And so has FX Evolution. We've actually pretty much founded at the same time, and both of us have been around for 10 years, and we've actually been working very, very closely with Pepperstone for nearly 7 years. So we've actually been with them for a very, very long part of their journey. And it's been a very, very good relationship, because I guess we have the same drive. We want to help people become better traders, and Pepperstone have been around for a long time. They're, obviously they've been here for a long time. That's testament to their quality, and like I said, you only have to look at their reviews to understand that. So yeah, we're very, very happy to be part of the Pepperstone team. And like I said, it's really a joint 10-year anniversary. We've both been around for a very long time and been working together for quite a bit. So that's why we came up with that special for Pepperstone clients.
Now, Ty, I've got another question here from David. It says, is there any key dates we should keep an eye on, like non-farm payrolls? It really depends on what you're trading. Of course, non-farm payrolls, they have an effect on the stock market, sometimes a very large effect, but they tend to actually destroy the Forex markets more. The last couple haven't been as volatile as others, but yeah, non-farm payrolls always a very important bit of the information circle for the month. And things like in stocks, it's really earnings. I mean, earnings is the biggest thing, knowing your dividends, knowing your earnings, knowing your seasonals. So if you're trading stocks and shares on Pepperstone, I think it's very important that you are aware of earnings season, because you can get it can all go bad if you don't know that your company is having earnings, and then you go into the pre-market and then the post-markets where the earnings are coming and you don't expect it. So always remember, implied volatility will be well up on earnings, and in a lot of hyper stocks like Tesla, usually it's somewhere around a 7 to 10% move on the day. Now, it wasn't that big yesterday, but you can see that it was 4.5%. So it gets wild out there. You've got to be careful. Anything else you want to say, Ty?
No, I think that's pretty much wound up what's been a really, really good webinar. It's a very exciting time. Hopefully you've all really got your heads around CFDs and how to trade them. Just one important note though, there is a survey at the end of this webinar, as there always is. Please take the time to fill it out for us and for Pepperstone. It gives us a really good idea on what everybody wants and how we can present the most important information to you all, so you can really get the most out of our knowledge, so we can pass on as much as we know and really make it a good experience for you. So please take a minute or two to fill out that survey, because it is a great help. And look, thank you very, very much for joining us and giving us the time tonight. We'll be back with you, I believe, in 2 weeks' time. So look out for those invitations. But of course, another reason to just join the Telegram group, so you never miss an announcement and you never miss the replays. A lot of people have asked about the replays for this. They're also posted in the Telegram group as well. So there's if you're part of that group, you won't miss a thing.
Awesome. Thanks so much, everybody. We hope to see you in 2 weeks or in just a few moments. And we wish you all the best in what is a very exciting earnings week. See you soon. Bye for now.
Thanks, everyone.